Ever wondered why gold prices fluctuate or why the Federal Reserve's rate cuts make headlines? Well, it's all about the interplay of economic factors and market sentiments. Let's delve into it. Gold prices, like any other commodity, are influenced by supply and demand dynamics. But there's more to it than meets the eye. Gold also serves as a hedge against inflation and economic uncertainty. So, when the economy is on shaky grounds, or inflation is high, investors tend to flock towards gold, pushing its price up. Now, coming to the Federal Reserve's rate cuts. These are essentially reductions in the interest rate at which banks borrow money. When the Fed cuts rates, it's often to stimulate the economy. Lower interest rates encourage borrowing and investing, which can spur economic growth. The Federal Reserve's rate cuts, however, can also have an impact on gold prices. Here's how. Lower interest rates reduce the yield on bonds and other fixed-income investments. This makes gold, which doesn't pay interest, more attractive in comparison. So when the Fed cuts rates, it can push gold prices up. But what happens when the economy is strong and the Fed is focused on bringing down inflation? Well, this is where things can get tricky. As the Fed gears up to fight inflation, it may hold off on rate cuts. This, in turn, can dampen expectations of higher gold prices. However, market participants are currently seeing almost a 70% chance of a first rate cut by 25 basis points in March. The likelihood of a second rate cut in May is at 60%. These expectations are keeping the broader appeal for gold upbeat, despite the stance of keeping interest rates restrictive until price stability is ensured. This week, investors are also focusing on the core PCE price index data for November, which can give more insights into the inflation rate. If inflation is seen growing at a steady pace of 0.2%, it might support the Fed's stance on inflation control, thereby influencing gold prices. Meanwhile, geopolitical tensions between Israel and Palestine have resurfaced, which could potentially infuse strength in bullions, adding another layer of complexity to the gold price dynamics. In summary, gold prices are influenced by a myriad of factors, including supply and demand, inflation rates, economic uncertainty, and the Federal Reserve's rate cuts. Understanding these factors can help investors make informed decisions and navigate the ever-changing financial landscape. Remember, the key is to keep an eye on the bigger picture while focusing on the details.